So who do we target is the question. And so the first people I would target is I'd go look in my own database. Hey, I didn't do any HELOCs. Well, I may or may not have either, but it doesn't mean they didn't do one. Maybe they did one with Bank of, awesome institution. Carl, I'm gonna do a HELOC. Are you okay with that? Of course they didn't call me. First thing I would do is I would call my entire database from A to Z. Have they done any other financing on their home since we last spoke?
Well, and I think that the topic gives you an entry. And I just wanted to check in with you because, we've known you for a long time. It doesn't cost you any money. It's an easy icebreaker. If nothing else, they know you're looking out for 'em. Hi, folks. Welcome to Insights with A&D Mortgage. My name is Jerry Byers, Senior Content Manager for A&D. And I wanted to share some great information that we think you will find valuable over the next year. In 2021 and 2022, many borrowers took advantage of great rates on interest-only HELOCs. And unfortunately, or fortunately, over the next year, many of those are going to hit their 5-year mark. So I reached out to Carl White of the Mortgage Marketing Animals and to get his take on the situation and see what strategies could be employed to help assist these borrowers who are going to see increased monthly payments. Carl was kind enough to share his insights, so let's dive in.
So you called me up and you're getting ready to write an article about reaching out to people that did HELOCs about 5 years ago that they're getting ready to reset, and where's the opportunity for the loan officer, and how can we benefit the borrower all in the same time by converting these HELOCs that are like a second mortgage, and refinance it into one loan. By the way, so dude, I just saw this report, shocked me. Said that um, I think it was for last month, or was it the month before, that it was 55% purchase loans, 40% refinance, and 5% HELOCs. That was a breakdown last month. I was shocked by how many refinances that was.
Yeah, that kind of shocks me too, especially at these rates.
I I I know. So, you know what that told me, Jerry? That told me I'm not marketing. I think I'm marketing my database pretty good, but I think we were at uh gosh, what was it? I think it was, and I might be off here a little bit. If I remember right, like it was 21 or 22% refinance, which I thought was, I always
yeah,
shoot for that 70-30. That's kind of the holy grail for me. And but yeah, I saw this 60 or 55-45, pretty shocking. So all right. So what we're going to talk about is where's the opportunity for the loan officer, and how can we help our clients? And oh, by the way, get a commission check when we help them out.
oh, absolutely. And so we're always looking for ways to help our brokers and MLOs just find a target that might not be addressed currently, that might be upcoming. And this is pretty common with brokers in general. They're always looking for, okay, where can I grab a piece of the pie? And so we thought about it, and this is what we see as a real win-win because you're going to have a need, and you need to have some people who are prepared and well versed in how to convert those people or in those HELOCs into the best possible um, lending opportunity that you can
Yeah.
provide for them. And I think that there's a lot of possibilities out there. I don't know exactly which ones would fit every individual, but the point is that those people are definitely a target right now for something that I think
But
would.
you know what's funny in that there, Jerry? You're right. They are uh, uh, in need of our help, but the problem is they don't know it.
Exactly.
That's the problem, and so it's our responsibility. Like that's like when I saw that report that said 55 purchase, 40% refi. What that told me was I'm not reaching out to my database and giving the message of other ways that I can help them. So we did a little bit of research and we found 29 different reasons why people refinance. There's 29 different reasons. That's for another episode. Yeah, that's for another episode. But one of them was, for these HELOCs, putting them under one. So, I think what the consumer doesn't know, and HELOCs come all shapes and sizes, but on the ones that you're talking about, which I think is very common, is HELOCs shift from an interest only to amortizing payment, oftentimes after 5 years. And what that means is their payment's getting ready to make a significant jump, and they don't know it. And they might have got this HELOCs back, and it was like literally 2%. And what they don't know is, oh, by the way, that might be 7 or 8% or 6% or 9%, or whatever the rate is, significantly
100%.
higher.
That's my point right there, is that it's not just about the interest only portion. It's about the fact that the interest rate itself is going to jump. And so we're seeing an exponential. I've seen a couple prognoses on how this could affect some people in Southern Florida and in Southern California both. And we're talking, sell your home because you don't have an option, because
Yeah,
there's no way that you're gonna be able to afford to
yeah.
keep up with it. So yeah, now the big question, and you're a real expert in this area, is how do we go about finding those individuals? How do
Okay.
we
All right,
yeah,
perfect. So we're wanting to contact them, because they may not be aware of the upcoming payment shock, right?
yeah,
And again, this is the creates a natural need for awesome people, Jerry, like you and I and our listeners here, to be a, proactive mortgage advisor where we step in. So I think, there's a couple things I think we can look at here. So number one, we can refinance them into a fixed rate mortgage, right? To locked in, a predictable payment. People like safety, people like comfort. So we can lock them in so it's predictable. It's into one product. And also, we can help them see if there's other opportunities, not just to help them with their payment shock that they might be getting ready to see, but that it's like, well, what, like a lot of these people, they're like one thing that we found the other day is that a fair amount of them are paying mortgage insurance, and because of the increase in equity that we've seen here in the last 2, 3 years,
they don't need to be.
they yeah, they can save hundreds and hundreds of dollars a month. And,
Yep.
and Jerry, they don't know it. They don't know. They don't know that they can get rid of PMI. Hell, I bet 80% of them don't even know that they're paying it. I mean, not that we, of course we told them at closing, hey, this is your PMI, but they forgot that, right? Because they're just living life and they got their job, and their 2.3 kids are running around the house, and the dog's got a limping with a thorn in
And
his.
they're not sitting there watching the bar get a little bit closer to 80%.
That's
Okay, I mean,
exactly right.
exactly, you're busy living your life.
That's exactly right. So they don't know these things, or maybe they don't know that, hey, we can do a cash out and put the HELOC into one mortgage, and maybe pull out some extra money for an investment, or for that pay for that wedding that's coming up, or any number of reasons. So who do we target is the question. And so the first people I would target is, I'd go look in my own database, and you go, well, wait a minute, Carl, I didn't do, some people that might be listening to this, hey, I didn't do any HELOCs. Well, I may or may not have either, but it doesn't mean they didn't do one. Maybe they did one with Bank of, awesome institution. Some of the loan officers listening to this work there, Bank of America. So maybe they did a HELOC with Bank of America, and they didn't call Carl and hey, Carl, I'm gonna do a HELOC. Are you okay with that? Of course they didn't call me, right? So so first thing I would do is I would call my entire database from A to Z. I would do a check-in call with them, and one of the things that I would ask them is, have they done any other financing on their home since we last spoke, to find out, maybe because I wasn't keeping up with them. I recommend people call their past database 4 times a year, and it'll help prevent these things from happening that we're not made aware of, so we have an opportunity to help the client out with that decision, and be part of the solution if one needs to be. But first thing I would do is I just call my own database, right? That's the first place that I would start. The other thing I could do is I could pull a list of clients who opened HELOCs, and I would target them like 4 to say 5 years ago, and that's public record. So we can go to public record data, and identify those people. I'd start with my own past database first before reaching out to people that's never heard of me. And so that's the
Right.
first thing that I would do. And as far as like the message I would send to them, my message would be, "Hey, your HELOC it might be getting ready to get a lot more expensive. Let's review your options now while you still have them." Or maybe like, you don't have to wait for a surprise in your monthly payment. Let's take a look at it at now. Because one thing I found is people love to eliminate uncertainty. I know I do.
Oh, yeah, absolutely.
And so if we yep. Yeah, and so if we let them know that, "Hey, you have an uncertainty here, we need to do a little homework and make sure that you're okay," I think that's my primary message, that I'm looking to do. And then I think, going forward is, I recommend calling our past database 4 times a year, which equates to 2 letters of the alphabet, each week. And so in other words, if I call the A's and the B's this week, the C's and the D's next week, because there's, 26 letters in the alphabet and 52 weeks in the year, when we call 2 letters of the alphabet, it comes to 4 times a year. And I know, so, in my branch, we close hundreds of loans each month. And one of those ways is through, reaching out to our past database. So as a general rule, we close about 1 loan per 100 people in our past database per month. In other words, if I have, say, 300 people in my past database, I would expect to be having 3 loans from that past database each and every month. And the other thing to keep in mind is a lot of our closing from our past database isn't them, it's their friends, family, and coworkers. Because that's part of our script is asking their friends and family ask if we can count on them to give us a call anytime a friend, family, or coworker is looking to buy, sell, or refinance. I call that my 3 by 3. And that when we do that, when we're calling our past database 4 times a year, that, again, we close about 1 per 100 per month in our past database. Some of those are purchases, some of those are refis. So,
Well, and I think that the topic gives you an entry. I mean, hey, listen, this is an issue coming up, and I just wanted to check in with you because, we've known you for a long time. And just to make sure, if you've gotten into one of these, it might be something you want to take a look at. It doesn't cost you any money to take
yeah.
a look at it and see if, there's something that's going to better prepare you going forward. And like I said, it's an easy icebreaker, and you're already talking to somebody you have a relationship with, and if nothing else, they know you're looking out for 'em,
Yeah,
and I
which
think
I
that says a lot.
which I think is a great message to give them. Say, "Hey, when we closed, I told you that I got your back, and so that's what we're doing here today is I'm checking your back. Well, I'm not I'm checking your backside out. I wouldn't say that, but I got your
So,
back,
like picking, yeah,
Yeah, yeah. So I think, I mean, that's where I would start with just my own past database. And the other thing, we could create an email and a postcard, something like your 5-year HELOC checkup, or what to know before your HELOC resets, or before you have that surprise increase in your payment, let's chat. And again, I wouldn't just call the people that I did a HELOC on. I'd call everybody because they may have done it through their local bank again, like we said in the beginning. So,
right. Yeah, they don't call you to let you know.
no,
Mm.
no, no. I mean, sometimes they do. Sometimes if we're doing our jobs right, I mean, oftentimes they do because we're calling them 4 times a year. But
Right.
hey, if we in the past we hadn't started doing that yet, and because we didn't know, right? Not our fault. Nobody told us to. Um, Good time to start, right? Good time to start. So, yeah, I'm not, as far as like reaching out consumer direct of people that don't know me. Um, that's really an expensive endeavor. I was just having a talk with a good friend of mine, Hakeem, literally just yesterday about this. Talking about consumer direct, and the problem with consumer direct is we have to be running ads, and then when we close that one, that's kind of the end of it. I mean, we get some referrals from that person going forward, but it's just expensive running the ad, like Google ads, somewhat expensive.
Right.
Social media leads, they convert between 0.5 and like 2%. So they're not really highly converting. They kind of clog up the system a little bit,
Right.
for
And if excuse me, if you're doing that, you're already doing it. And this isn't really targeted to us towards, a really focused group like we're really doing here. I have to tell you what one guy told me, and
Funny.
this is a broker up in Michigan.
Okay.
And he said, here's what we're doing. He's like, I have good relationships with all my realtors, and I'm just going to them and saying, hey, listen, you've been selling homes for the last 15 years. If you know somebody with a HELOC, um, make sure you're reminding them of that and send them our way because I got some really good options for you.
I like that.
And again, this guy has really good relationships with his realtors. They don't
Yeah.
work with him exclusively, of course, but because he has those relationships, he's already redone like 5 of them, and I
Yeah.
just literally mentioned this to him a couple weeks ago when the idea, approach came up with from one of my, associates, and he mentioned it to me, and which is how I got in touch with you, but I just mentioned to him like, "Hey, what do you think about this?" And he's like, "That's a great idea," and first thing he did was called his realtors, and they bring him business all the time, and he just said, "Hey, you got some folks that we didn't write, but maybe they wrote with somebody else and they did, a HELOC." And so, I mean, I guess there's a lot of different avenues for MLOs and brokers to take
Yeah.
with this, as long as they're being creative. The key, in my opinion, is one, um, let's get them, the brokers, aware that this is a situation that may occur, and maybe not for all HELOCs because some are 10-year, but a lot of
Yeah.
people
Yeah.
did the 5-year option. But
Mhm.
at least let's get them aware, and then if they're aware, they're going to run with it because
Yeah.
that's what they do. They're killers. They're going to be out there, you know, um, you know, working working their business at like the way they always do. Really nice
Um,
meeting you, Carl.
Nice meeting you too, brother. And hey, for our listeners, thanks for listening for me all those years, and give a warm welcome to Jerry Byers. And hey, and take action to this stuff. Reach out to your past database and find out about the how you can help them with the HELOCs that'll be coming due. If you need help with that script, you can reach out to the team. How do they do that? I think it's getmoreloans.com. I think it is getmoreloans.com. So thanks a lot, and we'll see you on the next episode.
Right. Thanks for joining us. As we discussed with Carl, many borrowers are facing challenges with their HELOCs, but this provides us an excellent opportunity to find some positive solutions for them going forward. Please like and subscribe to our channel. Are you employing any of these strategies? And do you think Carl's suggestions are good? Please let us know in the comments. We'll see you next time.